Thank you, sir. Thank you very much. Take them just a sec. There we go. Got my mic on. Thank you very much, folks. Todd Gordon did a fabulous job setting the table and giving you guys some great insights into technical analysis. I was lucky enough to spend some time with Todd, as you could see from the pictures he posted of us skiing. I have skied every weekend all year except this one. And that's because Kim Giffler asked me if I'd come here to the Traders Expo. And as Todd said about friends and so forth when you were all waving, Kim was defining for me. I said, sure, Kim, I'll be there because we're friends. And she said, no, John, you're my good friend. And I said, what's the difference between friends and good friends? She said, a friend will help you move a couch. A good friend will help you move a body. And Kim hasn't asked me to move many bodies lately, but I know that's out there somewhere, Kim. I am Jon Najarian. I'm lucky enough to be here in front of you guys. I'll be signing a bunch of books that we're giving away. I know whenever you see that commercial, you think, are they really giving those books away? Yeah, we are. And for probably the first 400 of you that will be down there at 6:30 tonight, I'll sign as soon as the exhibit hall opens at 6, I think. So at 6:30, I'll be down there signing books for an hour, giving them away. You won't pay a penny for the book. We'll give it away. It's called Follow the Smart Money. It details how Pete and I do what we do. And as the nice intro was that I played for the Bears, very briefly, I played 4 games. My brother Pete, so not for long, was very true of me. But I did get onto the stage, got to break a helmet in half, which is fun, and that's why probably they figured out Mike Singletary was better than me, because Mike probably broke a dozen of them. And that's one of the things he was famous for, by the way. But he's also a great guy. My brother Pete, another great guy, played 6 years in the NFL. So whenever you see me and Pete together on CNBC, a lot of folks will say, John, are you and Pete twins? And I'll say, no, we're 6 years apart. And then a bunch of them will say, well, Pete's the older one, right? And I said, yep, that's right. No, it's not. I'm the older one. And I'm just very lucky to have a brother as smart and as nice as Pete to work with me. I'm not going to spend a lot of time on some of these slides, but this one, again, we will give you that book downstairs. So the first 400 of you at 6:30, I'll sign them today and again tomorrow. For those of you who are here tomorrow, we'll also give those books away, and you can check it out if you go to Investitute. That's also another place you can get it if you don't want to wait in line today or tomorrow. I did do a lot of work with CNBC for 10 years. Before that, I was with Fox. For the last 10 years, I've been with CNBC. They do a great job supporting us. Hopefully, we'll get them at some of these conferences in the future. But if they could see what a nice crowd that Kim and the group at Traders Expo have put together, I'm sure they'd love to be up here in front of you as well. The talk today was really, and is really, going to be about, okay, what's a bigger driver, China or Jerome Powell and the Fed? And I'll discuss various points about it, and then I'll offer you some insights that I believe I have. As you can see with the picture here on the slides, China has been beaten up. There's no doubt about that. If you doubt that, and when we had Mark Mobius, Mark's not here at this one, is he? No. When we had Mark Mobius down in Orlando earlier this year, Mark, we were talking about China and so forth, and one of the things I believe about China that you may have heard me say on CNBC is that be careful about wanting to be the president for life, because I'd rather have 4 years than a lifetime appointment in China if the market drops 27% in a year, which it did last year. Why? Because when the markets drop 27% and people in China are seeing factories closing and people that have gotten used to different types of protein are no longer able to afford those proteins and so forth, you might see that your lifespan gets shortened by a lot. So if you don't think Xi Jinping pays attention to that, I think that you probably also don't think that President Trump watches Fox and Friends. He does, and Xi Jinping does. They both pay attention to things like this, and I think that it would be a mistake to think that, oh, China's got a 100-year plan. Ask Japan about the 100-year plan with Pebble Beach. Anybody here remember that? Show of hands. Okay, when they bought Pebble Beach and paid $790 million, the Japanese did, I believe a Japanese insurance company, they way overpaid for it, at least at that time. And they said, but we have a 100-year plan for it. And 2 years later, they sold it at a significant loss. So 100-year plans tend to change, and lifetime appointments, like Xi Jinping is operating under right now, tend to change as well. So be careful about that. They do have a good relationship, and I'm going to touch on that. But nonetheless, they're both pretty tough old birds, and they also need to really appeal to the bases that they have. Xi Jinping's base is Communist Party in China. President Trump's, of course, has been detailed in the press over and over again, so I don't need to extend that. Here are some of the companies in the United States with the largest exposure to China. I'm not saying you buy all these. I'm not saying for any of my slides you go out and buy any of this. But I am not a registered person. I own a wealth management firm. I own a firm that teaches people how to trade and so forth. But I am not out here saying, I know exactly what your situation is. You should buy every one of these stocks. These are the stocks in the tech space that when I looked at it, I think some of you would be perhaps surprised to see Skyworks is 85% of their exposure comes from China. NVIDIA, Micron, Apple. Obviously, people thought that one of the reasons that Apple didn't do so well was really twofold. It wasn't just that people in China cut back and maybe rolled over to a cheaper version of the iPhone because the new version, the 10X and the 10XR, were so much more expensive, but also because a lot of the folks in China were looking at the best opportunity for their money, and few of them could actually afford the new Apple product. But I think the Apple wounds were also self-inflicted because Apple decided to stop giving us guidance and telling us how many actual units were sold when that's what everybody on the street was using as a yardstick, as a metric. So if you are expecting to see 48 million phones sold, and all of a sudden Apple tells you, we're not going to tell you how many phones we're selling, you're not going to be a happy camper. And you saw what happened to the market reaction as that played out. Here's the Chinese companies that if we get to a trade deal, these are the ones, whenever I hear whispers about a deal coming closer, and I don't think anybody in this room thinks the deal's going to be like a light switch on and off. And it'll take a long time for us to hear what the deal is, what the various alternatives will be if agreements aren't met, if things that are agreed to are not actually adhered to by the Chinese, what will happen? Well, when I'm trading these stocks, these are the ones that are going to move dramatically, I believe. Chinese travel companies, C-Trip. This one has had 8 and 10 and 20% moves in a single day on whispers. So have HUYA, which is a live gaming platform, and YY, which is streaming business in China. These are companies that are going to do extraordinarily well, I believe, if a trade deal comes to fruition. Now, everybody wonders, why don't you talk about Caterpillar? Why don't you talk about GM? Because, of course, tariffs and cars and so forth, those aren't as exciting to me, and quite frankly, I don't think they're going to move like these. So my way of playing as far as what's bigger, Jerome Powell or a trade deal with China, these would be some of the ways that I would play a trade deal with China happening. However, Jerome Powell is a bigger deal, short term, than a trade deal with China. Why am I saying that? Just look at what happened as soon as he did his pivot in January. Why do you think that from December 24th low, we saw that massive surge in money flowing in. Were we oversold? I believe so. I think, Todd, you thought so. But Jerome Powell also scared a lot of people when in October 3rd, when he said, we're pretty darn far from neutral with our rate. And people took that as meaning, since the Fed had 3 more, at least according to the dot plots, 3 more rate hikes out there, people got really upset. And when people get scared and upset, they leave the markets. And they left in droves in October, came back a little into November, and then December was just a crap show. And part of that crap show was, again, self-inflicted wounds. In one case, at least, it was Steve Mnuchin going out and talking to a bunch of the bankers and then telling us that he spoke to a bunch of the bankers. Nobody wanted to hear that. I remember when Paulson, former Treasury Secretary, spoke to a bunch of the bankers in the crash of '08. We didn't know about that on that next day, but Mnuchin basically decided to go out and tell everybody that he had spoken to all the bankers and they were fine. And some of us were scratching our heads going, you're the Treasury Secretary. Don't you kind of know what their balance sheets look like? Why do you got to bring them all into a room and ask them if it's okay? You know if they're in trouble or not, because all of it rests with you. You see it every day. But anyway, that scared the markets pretty severely, and that's why on December 24th, half-a-day trading, we fell, whatever, 600 or 800 points, because the markets don't like to hear that sort of transparency. Here's what happened last year. On a given day, believe it or not, we fell 1,600 points in the Dow. And we went from down 700 to down 1,600 in about 4.5 minutes. And whenever these things have happened, like the flash crash, for instance, which was 2011, when that happens, the numbers that you and I are seeing aren't real, because they've already happened and we're seeing them late because the tape can't keep up with it. And that was the case with this. People thought that basically the tape, meaning, you know, the ticker, stopped moving because it just got jammed up with so much data. And all of a sudden we went from down 1,600, as you can kind of see on the that V-shaped bottom right there. There we go, right here. You can see how quickly we came off. It was a matter of minutes, maybe even seconds at the bottom before we came back up. And I bring that up because during December, we were seeing more volatility in the S&P 500 than Bitcoin. I mean, how crazy is that? And you guys know what happened to Bitcoin last year, because it went from basically touching 20,000 in December of last year to now where it is $3,500, $3,800, wherever it is these days. So volatility isn't always a bad thing, especially the way that I view it, and I think the way a lot of you view it. I'm going to have a chart that I'll put up here in a second about the way Goldman Sachs views it, but volatility just means that premiums are higher. If you're somebody like me who likes to buy and sell premiums, I like higher premiums. It makes it more fun to trade, and it provides more opportunities. This is a chart of the VIX, as you can see, hitting that spike December 24th right here and touching all the way up to basically almost 36 or 40 on a given print right there before it bled all the way back off. I don't know that it goes to single digits again, but I think that spike created a lot of opportunities. Here's an example of how that volatility works for you. I had the privilege of speaking at Davos this year, and a 3-night stay at this hotel in Davos was 7,500 euros for 3 nights. And they have a special deal in Switzerland where you can only mark it up 20% higher than your highest price. But apparently that deal doesn't apply during Davos. So the very next, period, that same 3-day stay would have been 237 euros, 97% less. So if you're somebody who has calls, for instance, to sell in Apple, when all of a sudden the world doesn't know what's going on, and is Tim Cook crazy, or are they ever going to sell another iPhone in China or whatever? Bunch of stupid questions, because Tim Cook's a genius and Apple's just fine, by the way. I think you'd rather take advantage of that and collect that higher premium than collecting $237. Just one example, but an example that's kind of one that all of us could understand. Todd, before I got up here, Todd Gordon was talking about EEM, and I saw a great presentation by him out at the Chart Summit that he and I were at in Breckenridge, Colorado 2 weeks ago. We went cat skiing. It was fabulous. A bunch of great smart traders like J.C. Peretz and Brian Shannon. They were the guys that hosted it. And Todd and I got to participate, loved it. Take a look at the United States over the last 5 years versus EEM. As Todd showed you, EEM did have a significant outperformance in a very narrow period of time, but over a 5-year period, the US is up 45% and EEM is up 3%. A lot of what's going to happen in EEM, of course, is going to be what happens in Asia. And when you guys look at it, I'm sure that Todd has told you as well, don't think that you're getting Brazil as a significant piece and so forth. A lot of what you're getting when you get EEM is Asia, and most of that isn't China. Most of that is Korea and the semiconductor plays. So the United States and China are discussing a meeting where President Trump and Xi Jinping are likely to meet down at Mar-a-Lago, play some golf, have a good time, come out for a press conference and so forth. Would I buy it that day? For a short trade, yeah, for a short, very short period of time, just like Monday this past week. I think a lot of you probably saw us spike to the upside on news that perhaps an agreement was imminent, and then we sold off hard after that. In fact, I talked on CNBC about somebody coming in and buying 100,000 puts on calls, 100,000 calls in the VIX, which is like buying a bunch of puts on the S&P, because calls in the VIX go higher when the market dives. And they bought these calls, they bought 100,000 calls, they sold, I think, 30,000 put spreads to pay for it. Bottom line was, on that trade in about 20 minutes, they made $1.3 million. And they still have the trade on. And they probably will ride this trade for a little bit longer. But that's somebody that was pretty smart, that had a lot of money to put to work. China has committed to buying up to $1.2 trillion in our goods. These are why the U.S., reasons to be optimistic about the U.S. on this trade agreement. They remain far apart on forced transfer of intellectual property and so forth. That'll be a big sticking point, especially with Congress. And this is why he's worried, beyond what I already said, about, be careful about having a lifetime appointment. They had their worst year in a long time, Chinese stocks did. They were down 27% last year. You can imagine the whining that would have gone on here if our market was down 27%. In December, we wiped out all the little bit of the gains that we had and went negative, but in China, 27% means, like I say, factory closures and a lot of people having to change their lifestyle, some of them pretty dramatically. This fall was almost double the fall of their closest rival, Japan, which was down 14%. Reasons for the slump included the trade war, which is 90% of it. Here's property sales, however, in China. As you can see, pretty dramatic sell-off in property sales in China from January of 2016 right here, when we peaked, to coming all the way back down. Not going negative like we were in that period, but all the way down to there. And China announced that they're going to throw up to $125 billion, and they did a tax cut. I mean, they're basically throwing the kitchen sink at it, and I think the next piece that they're going to throw at it is a deal that we're going to have between ourselves and China, but it will take a while to play out. But again, to the question that I asked myself when Kim asked me to speak, which is bigger, Jerome Powell deal with China. Long term, deal with China, of course. Short term, Jerome Powell. If Jerome Powell makes a dramatic shift, as they did, that pivot in January, and you don't pay attention to it, you're making a big mistake, because this is something that's behind why we had our best January in 30 years here in this company. Dovish Fed, bullish. You heard Warren Buffett say it, that if interest rates, if the 30-year rate is going to be hovering around this 3% level, he said, I'll buy stocks all day. Only problem is he's got so much money that it's tough for him to buy enough stocks. He needs to do such big transformative deals that every once in a while he gets sucked in with people like that Heinz deal, where when they bought Heinz, they thought, oh, this is so great. But Heinz wasn't a brand that was on everybody's radar as far as, oh, this is the brand in the United States. Tide might be a little closer to that with Procter & Gamble than Heinz was. And now with all these grocery stores continuing to produce their own, that's one of the problems that Buffett has with that Heinz deal. Trade deal with China is another reason to remain bullish. Fuel prices have fallen, another reason to remain bullish. And U.S. consumer, if you haven't noticed, is still spending pretty actively. Some of the numbers that came out this past 5 days, Target, Kohl's, both of them just blew out their numbers and moved higher. Both of those stocks I still think are cheap. My brother Pete loves both of those, and we're long those in a managed money that we do. Here's an interesting thing that came out at the end of February, guys. I know you're aware that smart firms like Goldman, I don't demonize Goldman Sachs. I traded for the partners at Goldman Sachs. Pete and I did for, I believe, 5 or 6 years, just for their money, not for the money that Goldman manages for outside, just for the partners. We traded for them. And I think they're some of the brightest men and women in the business. Fundamentals of overwriting the S&P 500. They did a 16-year study. You guys know what an overwrite is. It's where you own the stock and you sell calls against it. So in other words, you own an apartment and you rent it out, either monthly, quarterly, or whatever. That's the same thing. That's what this is about. So Goldman looked at doing covered calls on the S&P 500 stocks, and they said over a 16-year period that the growth of $100 invested in the S&P 100 total return versus selling these 10 and then selling 10% out of the money covered calls on a monthly rebalanced market cap weighted portfolio outperformed by about 140 basis points per year. Gave you a little less downside and a lot more cash flow than just collecting the dividends, the 1 point, whatever it is, 1.3%, 1.7%, wherever it is right now. As I've already told you guys, I'm going to be signing books at 6:30 downstairs. I'm not winding up yet, but I'm just going to show you a couple trades. This one was from last week because it shows you the methodology we use when my brother Pete and I trade. This particular one is Western Digital, WDC. This is what our log looks like where we post these trades for all the subscribers, and this is what we cite on the Fast Money Show then virtually every day. So Western Dig, here it is. We've been buying calls in there since it was 44.15, and that date was January 25th. Then they came in and bought more calls in February. Then they bought them again. Then they bought them again. So we love following when people are going back to the same well. When somebody who's been right decides to stick with that and put more money into that particular trade. Here's where that has gone basically from the end of January when we started citing those, when it was, let's say, 40 bucks a share, up here to 52. So there's few better read-throughs for us. I love what Todd Gordon does, and he's one of the best tech analysis guys in the business. I pay attention to what he does. I think if you're somebody who follows charts, you could make a lot of money trading options against the charts when they set up for what you're looking for, if it's bullish or if it's bearish. call spreads, put spreads, whatever, I think you can really take advantage of it. Here's EA, Electronic Arts. Luckily, beginning of February, we saw a very bearish three-way when the stock was $91 a share. They were buying the 89 puts when the stock was $2, let's call it, higher than that. And what happened after that? Stock fell from basically $91 a share, there's the drop, to $78 a share. The calls that they were buying, and rather the puts they were buying for $3 went to $12, almost overnight, literally overnight. And then, strangely enough, believe it or not, they came back in and bought calls when the thing fell like that. No better tell than that. The reason we wrote the book, as you guys will see, Follow the Smart Money, is that we know that there are people out there that can spend more money on research than I can, that have a bigger team to go out and visit all these conferences, JP Morgan Healthcare Conference, the Cowen Cannabis Conference, whatever it might be. They have a team of people that are basically texting from the back of the room as the speaker is saying something bullish or bearish about the stock. If you don't think that they have better access to information than you do, because you're only one person, then you're kidding yourself. Here's another one, Snapchat. Here's 3 in a row bullish calls on Snapchat. Beginning first day of January, Snapchat's 569. Somebody comes in and buys 12,500, February 7 calls. So they're about $1.30 out of the money. They bought 1.2 million share equivalent of that. What happened? Snapchat came out, and there they bought them all the way up till the 6th, when they bought 13,000 February 9s. What did Snapchat do? It popped basically to $9, pulled back to $8.39. There's, There's a chart of what happened when it made that pop. So somebody...
Insider trading?
Sometimes. Gentleman said insider trading, and I say sometimes. I know that, for instance, Raj Ratnam, if anybody here remembers that name, he was accused of insider trading for a bunch of stocks. One of them was Hilton. We talked about Hilton. I even put it out into the 4th of July holiday, and I said, this looks dirty. Somebody's buying way too many out of the money calls with like 2 weeks to go. Takeover was announced by Blackstone, and the SEC called us and asked us for our data, and we gave it to them. I'm not saying that's what got him, but I'm saying that when people do insider trading, when you have material non-public information, what I described earlier, going to conferences, paying for research and so forth, that's not insider trading. Insider trading is where I know, because I've got a girlfriend who's at the law firm that's copying basically the board packs that they're going to circulate at Hilton for Blackstone taking them over. That would be insider trading, material non-public information. And when that happens, people get caught and they go to jail. We are following unusual activity. So I'm not creating it. And I don't have that girlfriend. Luckily, I have a wife who would be very upset if I did have a girlfriend. I'll leave you guys with one quick joke about lying and liars, because it's not always what you think. So there was a little boy, came up to his dad, said, "Dad, how did I get here?" His dad said, "What do you mean?" And he said, "Well, how was I born?" And his dad said, "Oh, well, your mom and I got together, and our moms and dads were babies once too, and they were brought together throughout history. Men and women have gotten together and had babies, and that's how you got here." And he said, "Oh, okay, it's kind of confusing, but okay." So he asked his mom, how did I get here? And his mom said, "Well, back in the beginning there were monkeys, and then those monkeys started evolving, and they got smarter and smarter, and eventually they started becoming people, and then those people had babies, and that's how you got here." So the kid went to his dad and he said, "Dad, I can't believe it, you lied to me." Dad said, "What do you mean?" And he said, "Well, Mom said we come from monkeys." And he said, "That's her side of the family." You guys, thank you very much.